Burp, 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 burp.
Whoop, 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 whoop.
Oh man, it's been a long day, Jason.
It's been a hell of a long day. It's been a hell of a long week, and it's been a little minute since we've our first episode in the new studio. So apologies for the gap, but we had just one technical issue, didn't we?
But we have a new guest.
We have a new guest.
If you are watching on the YouTubes, you will see there is in fact a third record shepherd in the building in the form of this beautiful record shepherd portrait. A portrait.
Yeah, we got our little logo. We told you we're slowly building out the set of the new studio, so one step at a time, and we got ourselves our little alpaca dude with the shades and the music note chain. So we got him up, and there we go. So like we said, we're building it, and build it and they will come.
Build it and they will come. And so, we're excited to be bringing you another week's episode of The Record Shepherds. We have some really cool guests lined up soon, so looking forward to announcing that on the webs.
Yeah, exactly. And now we've got our little technical issue out in the new studio. We're going to get rolling. So there definitely episodes to come, and tune in and we'll keep you posted on those.
Yes, how you been, man?
Good, yeah, really good, mate. I've been all over the place recently. Where was I? So I went up to the Catskills, which I know you and I have went to last year in the fall. I went up for the winter this time. Got some snowboarding in.
Around the same place?
Yeah, a little bit further north, probably about 25 minutes, 30 minutes further north in Wyndham. Beautiful little town, actually. So for New Yorkers, if you've not been up there, beautiful little town, great little restaurants, and we got actual snow. A lot of people who ski and snowboard here on the East Coast, that's the ice coast, and I can't argue with that, to be honest. Usually it is, but we got snow all day, lovely dusting, and we had a great time. So I was up there for a mate of mine. It was his birthday, and that's what he wanted to do. So
nice.
Shout out to Barry, if you're listening, Barry.
Barry.
Happy birthday. We had a great time. So
I call you guys the lads. The
lads,
the little Irish trio that you got going on there.
Yeah, maybe. So
are you a good snowboarder?
I'm decent. I can get down the hill pretty handy, yeah. So but I want to progress. What I really want to do is get more into the park, where you're like they call it the park, was like all the little obstacles, like the boxes and the rails and stuff. I want to get better at that. But when I went up to Wyndham there, as I say, it was snowing all day. Visibility was not good. It was kind of, they had the snow cannons out, which they're blowing out ice. It feels like it's in your face. But so it wasn't the time to sort of start messing around in the park. I did it when I was out in Big Bear a few years ago, and that was my first taste of it, and I want to get back into that. So I can board and do a bit of skiing.
Man, I don't know if I've told you this story before, but I didn't grow up skiing or snowboarding, but I had this ex, and it didn't work out for other reasons. But I remember she tried to teach me how to ski one time, and I ended up fully crashing into this grown man in front of his son on it wasn't even on like a cool triple diamond, whatever. It was on like the bunny trail where they bring everybody to teach them how to ski.
Nursery slope.
Yeah, well, they kept telling me, like, she was like, pizza, like, that's where you turn your
French
legs
fries,
in.
Pizza French fries.
What is the French fries? Is that how you keep
That's
going?
like when you're going straight, or you're going and you want to slow down, you do the that's how the turn, they teach you, the turn initially before you're doing parallel turns. It's like pizza to turn, and then French fries to go straight, and then pizza to turn.
So I did pizza to stop.
Yeah, you should be doing pizza to stop as well.
But I didn't know you had to do pizza and turn to stop. Like you're like sort of digging into the snow as you turn. Because I was doing pizza, but I was still moving.
Oh, yeah. I don't know what you were doing.
I don't know. Maybe it was like, I don't know, Sicilian pizza.
You needed, did you?
It wasn't like...
Yeah, you sounded like you needed an anchor behind you, maybe.
But there's nothing worse than not only being terrible at something, but so much so to where you crash into a ground.
Oh yeah, it comes with the territory when you're learning to ski and snowboard and things like that. But Yeah, no, it's good doing that. And then I tell you what, where else I was. I told you I've been all over the place.
Mm-hmm.
The weekend past, I was at the Houston Rodeo.
Oh yeah.
Yeah.
They do music concerts there too, right?
Yeah, I saw the Zach Brown band
Nice.
perform on the Sunday night. I saw Walker Hayes on the Saturday. That was sort of like, a little bit of a country baptism for me. But fully enjoyed Zach Brown band on the Sunday night. Just absolute, what a performer, what an experienced performer. Turned up like looking the part. He was dressed the part. He had the hat and the beard.
Can I say everyone that I know that works in country music are like the nicest people on earth? It's not that other genres of people in the music industry aren't nice, but it feels like every time I've met somebody who works out in Nashville, they're like the nicest people on earth. I don't know what it is.
Absolutely, yeah. And I met up with Zach's manager, and he is a lovely guy as well, also based out of Nashville. And so that rings true in my experience as well. And honestly, it is true. Like even when I was down there, I just sort of noticed how friendly everyone is down there,
Yeah.
And that was in Texas, in Houston. But all over. Glad to be back in the studio and getting back into what we do best,
which is education through conversation.
Education through conversation, demystifying the music industry.
Yeah.
And
we have a pretty big subject today.
Yeah, we do have a pretty big subject, and you could say that we're a little bit, overdue in getting to this topic, because really a lot of the big action, which we'll dive into, happened in 2021 and 2022. Having said that, we did get one significant, very big acquisition at the start of this year in January, which we'll get on to talk about. But I think it's fair to say that what we'd like to talk about and what we think is a good topic to sort of touch on this week is all the catalog acquisitions that we're reading about in the newspapers.
Catalog acquisitions. So
artists selling their rights.
Right. You have seen a lot of that in various genres, a lot of legacy acts mostly, but you're seeing, like, interestingly, some popular current acts also selling their catalog.
Yeah.
And we can touch on those. But it's a very interesting time, and we're dealing, like, coming out of COVID and like a bunch of other factors that inadvertently affect the music industry might be some of the the reasoning that this is happening, which we can talk about as well. But
and I also think that even though I say we're a little bit overdue, it's actually a good time to touch upon it, because I feel like now we have a solid 2 years to look back on,
right?
And actually say, what was that all about, and what was happening, and why was it happening, and have we passed the peak, etc. But
let's dive into it. So we're talking about music catalog acquisition. So, I think it's important, before we even start discussing what acquiring music catalog is, we should define what music catalog is, right? And then we can sort of get into why people are acquiring it. So, Jason, our resident music lawyer aficionado, can you tell us what exactly music catalog is?
Yeah, well, I think let's start at the very beginning. And if you're not familiar with these terms that I'm touching upon, we have touched upon these in our prior episodes, so worth going back and having a listen to some of the podcasts if some of these concepts you're not familiar with. I don't intend to repeat myself too much, but it's everything. Tim is the answer. It's everything.
Everything, everywhere, all at once.
Exactly, that's it. So people are selling writers and artists who have a songwriting catalog. They're selling their songwriting, their publishing rights, which is essentially all the rights that they have in the songs and the royalty streams that come from the performance of their songs, etc. They're selling their recordings, right? And a lot of artists, through various different mechanisms, have negotiated or they own their own sound recordings, they own their own masters,
Right.
and they're able to sell those masters. And then others, they maybe don't own their masters, but they're still collecting royalties from the exploitation of those masters. Now they're selling those royalty streams. Okay, and then there's all types of other things, like we can get into like different types of royalty streams that come from those masters / recordings, i.e. neighbouring rights. That's like your sound exchange, your PPL it is in the UK, and all those types of things. And then there's even like name and likeness rights up for sale. Because I feel for the last couple of years, 2021, 2022, it was a seller's market. It was a feeding frenzy, and it was a great time to be selling, and nothing was off the table. So any combination of all of those rights, and sometimes the whole shebang all in one, we're selling art, we're selling everything. We're going to get it while it's hot, get good value for this, and be done with it, and cruise the yacht on into the sunset to a lovely little retirement.
So essentially, like defining catalog, we're looking at various rights and royalty splits associated with the creation of music, and a lot of what we're seeing is primarily on the publishing end. But as we're going to see, some of these catalog acquisitions can include the rights to the master recordings and other things as well.
Yeah, and the royalty streams, if it's not even the the actual rights necessarily, or the copyrights, royalty streams. Yeah.
Okay, so as you've highlighted, in terms of acquiring catalog, we've seen a lot of it spike in the last couple of years, essentially starting in 2020, 21, would you say?
Those, probably 2020, and then it got really big in 2021.
So what's interesting to me is if you look at like the timeline of what other things in the world happened around that time, do you think, actually let me ask it this way, what do you think has been the motivation in the past few years behind what companies acquiring these catalogs in recent times?
Yeah, it is super interesting, and honestly, you could talk for the full hour. That's my accent. Hour.
Full hour.
Yeah.
Flower.
You could talk for the full 60 minutes of this podcast about all the different reasons. Because it was like all these things. Usually, when it's like a storm, it's not just one factor. It's like a few things coming together, and then like it really sort of ramps it up. But I would say, firstly, you have to put down the real success of it all. I think, certainly a key driver to Hipgnosis, right? Which was Mercuriadis's essentially like vehicle fund that he created.
Okay.
For acquiring, like initially anyway, it was like the rights on the publishing side, the songwriting, and I think the trick that Hipgnosis were able to do, or not the trick, but just like the magic, or the sort of like eureka moment, was convincing Wall Street that really songs are like an asset class in themselves when it comes to like investments. And at a time when the world is very uncertain, investors are looking to diversify their portfolios. That's one of the key lessons you learn. Don't put all your eggs in one basket. Make sure you've diversified your portfolio to manage against risk and uncertainty, essentially. And if you think about songs, especially, once a song gets to a certain point in its lifespan, it's not just been released recently, it's like a good few years old. A lot of these songs, they become what we call evergreen, where they just continue to earn money. Like some of these songs just do not go away. And we can think about through like ones that spring to mind. I heard like Fleetwood Mac on the radio. Okay, those songs have been around for many years, like decades now, and you're hearing them every week,
Right.
sometimes every day, you know,
Yeah.
like these sorts of things. The Beatles, the Rolling Stones. It doesn't have to be like the top high hitters like that, but they're evergreen, and essentially they continue to earn what you see over time are fairly predictable income streams.
So okay.
So
Right.
where I'm going with that is that, like, it's essentially like a bond. A song is like a bond, right? You buy the rights to the asset itself, i.e. the bond or the song. It continues to earn money every year, yield in a bond or royalties in a song which you collect, and then once you're actually done with it, and you know you've done your sort of term that you know maybe you want to hold it for 5 years, whatever, you can sell it on to the next person. You know, so it becomes like a relatively stable, predictable asset class. And I think the beauty about what Hipgnosis were able to do was make Wall Street realize that this was an asset class that had not been tapped into by the sort of financial institutions and you know, institutional investment money. And another accelerant then, adding sort of, you know, fuel to the fire, was that music is sexy,
Yeah.
right? And then you've got like
It's like a
these-
sexy asset.
yeah, it's a sexy asset. And then, but in terms of getting column inches, I mean, like in the papers, when these artists are like selling, and you know, it's people want to read about it. People want to read that like Sting has sold his publishing catalog for $250 million,
Right.
and they go, wow, you know, like, and that it's Sting, or it's like you know, Bruce Springsteen, or it's like these are like characters that Bowie, you know, people want to read about these things, so it attracts a lot of column inches, the media, and then like it just seems like it's happening everywhere.
So do you think that we're sort of in a perfect storm when it comes to catalog being sold, when it comes to like where we are in the global economy? We're in a post-COVID society, and
Yeah.
also
Yeah.
how music has been newly positioned to Wall Street as being as something to sort of invest in the long term.
Yeah, totally. There's all those things, the uncertainty of the pandemic, but also there was just a lot of money. Like, you remember what the stock market did, like after the initial crash of you know, the COVID 2020. Like, it was only like a few months later where all of a sudden stocks were taking off. Like the stock market went through the roof, and people had money, you know, like just like people were looking, what am I going to do with this money? Where am I going to invest it? And just there was a lot of money sloshing around in 2020.
Yeah.
And as I say, people were looking to diversify. The tech bubble hadn't burst yet. It's just like everyone was feeling kind of good about things, and it was a bit of a perfect storm of all those factors.
So we're talking about a lot of money, right? And as we've seen with these sort of catalog acquisitions, we're seeing big dollar amounts float around. And so
Yeah.
what I'm wondering is, and you've already touched on it with the term evergreen, but like, what factors are these people considering when acquiring a catalog? Are they looking for, you know, like longevity? You know, maybe we can dive into that.
Yeah. Well, the answer is that, yeah, you do. You want to get songs that have proven they have staying power. You know, I'm saying songs, but all assets really, like the recordings as well. But songs is like traditionally considered a safer bet, because you can't go out and re-record songs or whatever. Right. So yeah, you want them to have proven staying power. The difference is, if you have an artist that released a song and it was a hit like this year,
right?
It might be a hit this year, and it might even get like, you know, stick around next year and the third year and the fourth year, but you can't really tell where it's going to be after that. You know, it could completely drop away.
Yeah.
Some of these, like these evergreen catalogs we're talking about, you know, a lot of them have been around for decades, and it's essentially, you can chart based on what the song has delivered in terms of income over, like, let's say the past 3 years. Usually companies, when they're valuing a catalog, will insist on at least 3 years, sometimes up to 5 years of past earnings, and you know, that's part of the due diligence process. The seller will have to hand over that material, and then the buyer takes a look and can do their own sort of massaging or sort of averaging out of the figures. If there's a particular big year, let's say last year was the 30th anniversary of an album and there's a huge spike from it, you're not going to be able to repeat that every year. So they kind of like, they managed it out to get an average, and then based on their own models and industry models, the likes of Goldman Sachs has quite a good sort of forecast model that the industry, a lot of people in the industry use, and they have their own of forecasting out essentially the trends or the likely trends of music of that particular vintage, that particular genre, based on what's happening in like sampling culture at the minute. Is that particular genre hot at the minute? All those sorts of things play into it, and you can basically plot out your future cash flow. So it's like essentially like a discounted cash flow model for anybody who knows anything about investments and things like that. So you're looking for that, but there's a scale, right? There's a scale of the stuff that's the absolute gold that you want, and then there's the stuff at the other end where it's just not proven and you wouldn't really be paying much at all, and then there's everything in between, and that stuff in between is of interest. You definitely don't want to dismiss that, so it's just a case of making sure you're happy with your valuation for it, and that the seller is happy with that valuation. And if you ultimately need a willing buyer, willing seller, and then you got a deal.
Yeah, I mean, what I've noticed in terms of trends in the music industry for the past couple of years, there's been an obsession or an observation of comparing new releases to catalog, and sort of the dangers of having music that's launched by user-generated content and short-form content, and what the ramifications of that is long-term. Is there sustainability in the music that we're releasing right now? And are these artists who are participating on the digital end, let's say on TikTok and YouTube, are these techniques sustainable for your catalog for 40, 50 years from now?
That's a really good question, isn't it? Like,
I think the answer is we don't know.
Well, the answer is we don't know, but like, here's the thing that somebody said, I can't remember who said this, but I do agree with it. Like, the songs that we you, I, whoever is growing up with, let's say in your teenage years, who are like defining significant parts of your life, like whoever those artists were for us, they meant something to us, and we'll probably carry those through, sometimes the whole way through life.
Good point.
Like, just because that type of music is being now discovered on TikTok, it doesn't change the fact that there's still kids in their bedroom doing the dances, listening to that song, who then going and streaming it or whatever, and it means something to them. So I think the discovery method, it has changed. Will those songs be around for the same duration as like something like the Beatles or the Stones, which, like, who knows? We'll wait and see. But it is true that it's in the modern game, we're digressing a little bit, but it's about making hits rather than building artists' career. Well, what artists' careers for like it used to be. There's career artists, like not as many of those today.
For sure. Well, I think new music has always been catered to a younger audience. And as a marketer, I think it would be a really interesting exercise to see at what point do listeners stop searching for new music as vigorously and sort of settle into what they've been listening to for years and years. Because I do think there's a point in which that drops.
Yeah.
But and you will pick up artists here and there, but in general, at least anecdotally, I've been listening to the same artist for like 5 to 10 years in terms of repetitive listening, and I discover new artists all the time. But it's rare for me to find, let's say, even 3 to 5 artists a year that I'm now listening to constantly on rotation. It's usually like pretty much the same things I've been listening to with a slower adage.
That's probably in some ways a little bit of a criticism of the DSP's discovery. Maybe we're too reliant on them. We need to do a little bit of homework ourselves. I'll tell you a funny little sidebar though. Yeah. It's funny what you say that, because I remember hearing a joke about like your dad or like dads dress how they did the last time they cared about fashion.
Wow. Wow. Huh.
Your dad basically dresses the same way he did the last time he cared about fashion, and then after that he just stuck with his look.
Yeah, I mean, there's definitely parallels to that sentiment in music, right? It's the last time you genuinely cared, because even, and I'm not that old, but I can kind of see myself falling into the same ideology that like my parents had, right? Where it's like, oh, I like what I like, that new stuff, you know. It's, and you swear that's never going to be you, but then it just happens. You know? So
my dad basically, you know, gave me my taste in music, and like gave me like an education and sort of like the sort of classic you know, 60s, 70s, even 80s music, and so I really respect that, and I'm thankful for that. But in the same way, I try to introduce him to artists that like he's not having any of it. He's nah.
Right.
I've got him the Beatles, something by the Beatles, like as a Christmas present, pretty much every year for, you know, I can't remember, since it was about 9.
Right.
And so's my brother, and so's my sister, and he still laps it up.
Okay.
Yeah. But anyway, we digress. But
no, yeah. So I think let's we can go back a bit, because I want to maybe talk about how we get to these dollar amounts, right? So as an example, in doing our research, one of the artists that sold their catalog in 2022 is the estate of David Bowie for $250 million.
Yeah.
So as an example, I think he sold it to Warner. It was Warner Chappell Music. Mm-hmm. How does a company like Warner Chappell come to a $250 million valuation for the publishing catalog of David Bowie?
Well, like I touched on there, like they're not just plucking this out of thin air.
Right.
You know, they have to. They'll have the. Well, actually, if they're all already administering, which I believe they were, administering that music, they've got the data themselves. They know what the royalties have been for the past X many years, so they're very familiar with all of that, and they can have their investment people sit down and then look. The first thing they do, as I say, they average out. They take any extraordinary events out of it. It's all got to be like, in their view, repeatable earnings, you know. So as I say, if it's been a big, like, you know, a 30th year anniversary last year, and there's a lot of sales or like a lot of radio play because of that, that's probably not going to be repeatable for the next few years until there's another event like that. So they have to average all that sort of stuff out, and then they're using their models based on you know, to plot the decay, right? They call it the decay, and these catalogs do decay over time. You know, they not many of them will be going at a flat line or even increasing. So they sort of drop down a little bit, but it's all very predictable when you get to like catalogs of that sort of caliber and that vintage.
Right.
So, and then they're building things in, like every company has what's called like a hurdle rate or a return on investment that it needs to achieve in terms of percentage, because ultimately, although songs, and especially something like Bowie, is predictable, it's not entirely risk-free. At some point, you're better just sticking your money into the bank and getting, you know, interest rates, or investing in like a tracker like the S&P 500 tracker and just getting the regular whatever it is on average, you know, 7% or something like that. So they have like hurdle rates that they have to achieve, and their like return on investments, and it's all sort of, all of that is factored into it. And then, as I say, the sort of forecasted decay rate based on that particular genre, that particular vintage, etc., and then they get to a number that they think will work, and then there's a bit of negotiating, you know, horse training that goes on, and you know, you sometimes have to massage those figures, etc. So ultimately, you know, there's a dance like in any negotiation, and if they can get to a price that's going to work for the seller that they're comfortable with, and sort of sometimes there's like a, you know, like a psychological figure that the seller has in mind that you kind of like have to get to, but it's all, that's essentially how they get to the price. You know, it's all modeling.
So that process makes sense to me for legacy acts, right? In which the
Mhm.
catalog has been proven over a long period of time. But
Mm.
what's interesting about the acquisition of these catalogs that we've been talking about is it's not only included legacy acts. Like we have our David Bowies, our Neil Diamonds, our Stings.
Yeah.
But what we've also seen is the likes of rapper Future selling his publishing catalog for 75 million. And, you know, even maybe a bigger case study is Justin Bieber selling his catalog for over 200 songs for $200 million.
Yeah.
So we have these artists that are super relevant today and super current also making the decision to sell their catalog.
Yeah, and this is like a lot of their lawyers, you know, and business managers will probably give you like pretty strong opinions on this, depending on who you talk to. But there's two different schools of thought, right? Like the real year, the significant year where prices were at their highest was 2021, like the end of 2021.
Mm-hmm.
I think the highest one that I have to mind was Bruce Springsteen.
Right.
Sold his publishing and recorded catalog rights at the end of December. It was end of 2021 in December, for upwards of between $500 and $550 million.
Wow.
Woo! So, you know, like that's, you know, there's that sort of thing in 2021, and then it died down a little bit. The prices weren't quite as high in 2022. So there's a school of thought is like, you know, get it while it's hot. You know, it's a seller's market. There's a lot of money coming in. The time is now. If you want to maximize the value of your life's work and basically sail off into the sunset, knowing that you've got yours basically, and you know that's generational wealth right there.
Right.
You know, who knows? You know, like what could happen. You know, between now and in the future, you got to wait for all that money to come in over time. Maybe it falls out of popularity, etc. So there is one school of thought says just if you've got it and the market is at its highest, get out at the top of the market. Then you've got another school of thought where like, well, no, like, you know, you're betting on, you know, you're hoping that you did get out of the top. Maybe things pick up even more. And now, like in 5 years' time, you're even earning, you know, much higher for whatever different reason. There's all sorts of ways that could happen. And music is finding more and more revenue streams.
Right.
That's one. There's a couple of schools of thought there. The other thing, for the likes of Future, and he specifically said this, I think, and maybe Justin Bieber feels this. It's like Justin Bieber's 28, right?
Right.
He's not like retirement age. A lot of these artists just back themselves just to go and do it again and say like,
betting
yeah,
on themselves again.
Yeah, like I'm a creative guy. I created all of that and I can do it again. And yeah, I'll sell out now while the market's good. And yeah, things might go even higher, or there might be additional revenue streams that I did not get factored into my price, you know, in the future. But it doesn't matter. I'll go out and write, you know, another 5 albums, you know, and maybe more, and I'll sell from there. You know, it's I was looking at I looked at David Bowie had something like 26, 28 studio albums.
Wow.
In his career, you know, like Justin Bieber's a long shot off that. So, but who knows, you know? So like there's personal circumstances as well.
Right.
Justin Bieber was suffering from Ramsay Hunt syndrome, unfortunately.
He had the Ramsay Hunt illness that he was working through,
which meant he had to cancel tours, etc. His North American tour, I think, got cancelled, and
so there is revenue, and that's a good point that you brought up, is touring, because with the illness that he was suffering through, there was also COVID, right? So many artists of that caliber were not able to make money on the road. So that could even be a factor as well in deciding to sell your catalog.
Yeah.
Not knowing if he could make, you know, I don't know if he can make $200 million in a year on the road, but he certainly is losing money not being able to tour for that time.
Yeah, a big chunk of that artist revenue is gone. And I think although touring came back, it didn't come back, I think, as quickly as people were hoping for, you know, in terms of the...
And that's an uncertainty, you know?
Yeah. All of the, there's lots of different reasons why you might choose to sell. Interestingly, there have been some artists who have not sold 100% of their rights.
Right.
They said, all right, well, we'll sell half or 75%.
So I think for me, that's the interesting thing with the Justin Bieber case study, right? And even comparing it to some of the legacy acts like David Bowie, Justin Bieber not only sold his publishing copyright, he sold his performance rights, his
recorded royalties,
percentage of the recorded royalties, his neighboring rights,
yeah,
essentially everything. For that $200 million price tag.
Yeah.
Whereas I believe Future only sold his publishing for $75 million, and then you have these bigger legacy acts selling just their publishing for around the $200 to $300 million price range.
Yeah.
So, I guess the what a lot of people would ask is, okay, understanding that there are a lot of factors, but if you waited a little bit of time, you could have probably sold your entire music catalog for, I don't know, maybe double that amount in 20 to 30 years. But I guess you would say you just don't know.
You just don't know. You just don't know. There's so many factors. Like the one thing about some, not all of it, but some of Justin's music will be, he sold his catalog up until 2022, right? So if he starts making more music in 2023, 24, that's not on the deal. So he can build up another catalog, and based on just the simple fact that some of those tracks, the later albums, will not have had the proven staying power as some of those heritage acts that we talked about. The multiple that Hipgnosis will have been able to justify there would highly likely be lesser than if maybe Justin Bieber had hung on to that catalog for another 10 years, maybe another 15 years, and they had proven to have that staying power. That's going to drive up the multiple, and now you are getting more value, but you just don't know. Maybe he was like, well, I suspect it was more a case for Justin of going like, this money's on the table now. I've got advisors telling me, this is good value here and now. Take what's on the table,
right,
and we can go again. But you just got to play the circumstances, and it just depends. What you got to play the hand you're dealt based on where you are at that particular point in time. And I think a lot of it, my hunch is, that sort of weighed heavily in Justin's factor and his team's factor to sell. Right,
definitely. So we've brushed on maybe some of the motivation pieces behind buying and selling catalog. We've talked about just some of the market conditions, and we talked about some of the big dollar figures. Maybe we could dive into some of the risks of acquiring these catalogs, right? So for Hipgnosis, can they just go in and buy the music and say, okay, now we can do whatever we want with this music and make as much money as we can from it? Or are there limiting factors there?
There are limiting factors, and this also gets sort of like factored in. You talk about income streams being like active or passive, right? And what do we mean by that? It's actually easier. Well, start with the active, right? Usually, what I touched upon before, if it's like a Bowie case where like Warner Chappell are already administering those songs, they have a history that they can rely upon, etc. But also, even more importantly, like if they acquire his rights, etc., and they're administering those songs, and they have the exclusive rights to be able to go out and license those songs. They have teams around the world, their staff, their various offices around the world, on a day-to-day basis, pushing that catalogue and pushing that, like the value of that investment to try to get more money in, to try to get it synced to more movies, more TV shows, potentially more advertising or adverts, whatever. And then they also have a back end team, which most publishers have, and certainly the big ones, of like income tracking teams who'll go out and they'll look at the stats based on everything from like radio play to number of albums sold in countries and territories, and they'll match up the data of the whatever they've been able to collect or whatever the statements are reported from the various PROs, as like performance rights organizations. Yep. Yes, thank you. And the mechanical royalties societies, etc. And they'll be like, hang on, there's a bit of a disconnect here. This isn't right. And then they'll go out and chase that money, like, essentially like follow up with it and track it down and find out where the mistakes have been made, because they are made.
Right.
And do all that to like maximize the revenues that they're collecting.
That's administering.
That's when you're actively administering those rights, and they're basically, those rights are within your control, and you have the exclusive rights to exploit, control, and represent them. Let's say.
Right.
The other flip side is passive. Right, where you are not the company that has those exclusive rights. Those rights actually sit with somebody else, but you're buying the artist or the songwriter's rights. Let's say that is the case for the Hipgnosis deal. Right, he was signed to
Universal.
Yeah, Def Jam on the record side, so Universal Music Group on the record side, and then different company under the same umbrella, but it is a different company, Universal Music Publishing Group on the publishing side. So those rights continue to sit with Universal,
right,
either the records or the publishing. And maybe they will revert at some point. I don't know Justin's deals, but they might revert at some point. But until that time, Hipgnosis are essentially, and not just Hipgnosis, that's just using this as this example, we're using the Justin Bieber example, but any company in that position, they're passively sitting back and collecting, and they kind of know that, like, it's in everyone's interest to maximize the revenues, because the Universal in this case are still taking a percentage, so it's in their interest.
I think that's important to note, right? Because with these headlines, when they say, like, for example, Justin Bieber sells his music catalog to Hipgnosis, a lot of people assume that means that Justin Bieber owned 100% to everything. Maybe he's administering his own rights to his music, and that's what he's packaged up and given to Hipgnosis. But in actuality, the administration rights and a percentage of the publishing still sit with Universal. Yeah. What you're essentially doing is swapping out Justin Bieber for this new investment company.
Yeah, the new investment company. The buyer steps into the shoes of the artist. So, right away from day one, the next royalty check that gets sent out, that's getting sent out to the buyer. That's getting sent out to Hipgnosis in this instance.
And when Justin Bieber performs these songs now live, the performance royalties generated for that are now going to the new investment company.
Exactly, yeah, exactly. So when he's on tour, I hope for his sake he's able to get back on tour and get his health issue under control. But yeah, when he's out touring and he's performing those songs in the future, he will not be earning performance royalties from the performance of those particular songs. If he's got a new album to tour, then yes, or new songs on that new album. He'll be earning from that, and of course he'll be still taking ticket money and merchandise sales and things like that, so there is still a reason for him to go on the road. But you're correct, for those particular songs, those have been sold, and the royalty streams will be, his former royalty stream will go to Hipgnosis. So like that's what it is when you like talking about a passive situation like that, where the rights are actually still controlled and by a third party. And if they wanted to, if like they decided like, well, I'm just not going to do much, like we don't care, we're not pushing Justin Bieber catalog this year for whatever reason, because here's a good example. Universal, they've acquired their own stuff,
right?
And they've got their sync team now.
So that's going to be the priority.
Yeah, you push all that stuff that we acquired, that we spent, 500 million on last year, and we need to maximize that. I'm not saying that happens. Like, the reality is, for a lot of these sync teams, they are trying to keep their clients happy.
Right. So there's more motivation.
Happy. Yeah, just to put the right songs into the right film, and like for whatever it is. So, but all I'm saying is there is a risk if you're not actively doing the job yourself. But that's all factored into the price. Like these investment people who work for, they're smart cookies, and
right.
They have these models, and they'll build in a discount for that, etc. But it is worth noting and understanding. And previously, actually, there'd be companies who just wouldn't go into the market at all for passive, but in the feeding frenzy and in this new era that we're in, nothing's off the table. It's like, if you don't take it, that man will.
Well, I also imagine too, like, the passive route might be a hard sell for investors, right? Because these investors who have traditionally not put their money into music catalog before, now you sort of have to explain to them, oh, well, our ability to make this money back is contingent on what Universal Music Publishing decides to do with the catalog, right?
Yeah. I think it's the better way to look at it is like there is certainly a risk there, but like you're just not in the shoes to go out and drive it.
Yeah.
You know what I mean? Like and drive added value. It's kind of probably just going to do its own thing and continue the trend, of what it's been doing. That's the way I'd think about it. But it is. Here's another thing that just occurred to me. There is risk to all of this. So one way to mitigate and manage that risk is what companies were doing back in the early 2000s with all the subprime mortgages, right? And I know that makes it sound like it's a bad thing. It's not, but it's just like this is what happens, right? It all gets
securitized, it look good and then sell it. Yeah.
It gets bundled up and securitized, so they're not just buying.
There's more leverage there.
One particular thing. There's now all these like private equity firms and investment funds who are in the market, and they'll come in. Investment funds will come in. They'll buy up a lot of these things and they'll bundle them together.
Right.
And that is precisely to manage that risk and make it more attractive. So if something goes wrong, maybe it'll impair the value somewhat, but you've still got the other 90% plus, ticking along nicely. So that's something that goes on as well. And as I say, it's just an indication of how this whole space has attracted the attention of Wall Street and some proper finance people,
right,
who are active in this space now. Blackstone.
Do you think there's any, just to play devil's advocate, do you think there's any negative ramifications for the music industry when you have passive players buying music catalog as opposed to actual music companies buying music catalog?
Like from a perspective
of from a perspective of the industry.
From the industry. Good question. Maybe some people will see that as a bad thing, and but honestly, I don't get that. I don't get that. I don't go along with that. It's like it's your music. Mr. and Mrs. Artist. It's your music. You created with it. It's your asset. It's your intellectual property. In the same way, if you created a company and you worked for years to build that, under the rule of law, it's your property and you can buy or sell to whoever you wish. And why would you not try to maximize the value?
Right.
It's like, or let's say it's a house. Sell your house to the highest bidder. It's kind of up to you, and you don't really need to worry about too much more than that. I mean, it's just all these investment companies. It's just it's still their dollars are still worth the same. The only thing I would say is that artists, especially these heritage artists, it's not just like a house, it's not just like a property, a tangible asset like this. These are their, it's their intellectual property. It's like their babies.
Right.
These songs that they've created and they care deeply about, and they want their legacies. They want to ensure that whichever company they sell to, their legacy is going to be respected. And that's where I think some companies do better than others. The music companies who are already in that space understand music rights, understand how to treat artists, and
and they have the
ultimately
relationship too.
they have the relationships,
Right.
but it's a deep rooted knowledge of, like respect for the music and the artist and just how things work and what you can and can't do.
And I think that's what I'm alluding to, and not to maybe not to personalize it too much, but in my mind I'm thinking of it as, okay, let's say I live in a neighborhood in Brooklyn, New York, right, and I've owned this home. It's been passed down my family for generations, and then, I decide to sell it. Do I sell it to the big developer who's offering me the most money, or do I sell it to the family around the block that I've known for years, and maybe they can't afford to match the big offer, but it's good to sort of keep it in-house in a way because it's beneficial for that community.
Yeah, no, that's a good analogy, and I think that does exist.
Yeah.
That does exist. Like this particular investment fund who are like the new kids on the block in the music space, they're offering 50 million more or 20 million more, whatever it might be. This other company can't get to that same price tag, but we know that they are they're a known quantity. They've been operating in the music space for X amount of years. We've been working with them previously, and we know that they deal with us with respect and courtesy, and it's a partnership.
Right.
And I think for a lot of, they say that it's from the horse's mouth. That's one of the reasons why you get the same companies coming back up time and time again, especially the existing music companies. Like the Universals, the Sonys, the Warners, the BMGs, the Primary Waves,
Right.
These companies that are like active in that space, and people say, like we know they're going to do a good job of our legacy.
Right.
We're entrusting them with our legacy, and I feel that what they don't, or what the concern might be for some of the newer kids on the block who are don't have a history of being in the music industry, is that like they are just going to treat these as cash cow assets, and you can ruin songs like that. Here's a great example. You know it yourself. When a song like is a victim of its own success, and it just like is, the radio stations play it to death.
Yeah.
You got to remember that the music stations, the radio stations, a lot of people will tell you they're not in the music business.
Right.
They're in the advertising business.
100%.
And like, how often has that happened where like a brilliant song has come along and you've loved it,
Just milk is
and
the
then
death.
it's been absolutely fried,
Right.
and now you can't stand it, and actually the band they can't stand it because they go to play it and all these people turn up at the shows, they don't know any of their other catalogue, and they're just waiting for that one song.
Don't stop.
No, I'm thinking of, I've got Sex on Fire.
Oh, okay. Yeah, that's definitely another one.
But then, and there's no reason why the band shouldn't like that, by the way. They eventually do come around to loving it again because they realize like this has given us like,
well, to your point, I
the
think
success and the platform for people to actually, the true fans to eventually discover our music, but
but also to your point, they kind of become caricatures of themselves. Like when their catalog is exploited so much, whether it be one or two songs, and it's like, okay, well, what is there room to discover the rest of their music? But I think maybe that there is room to discover, and you can't be so harsh. But yeah, I guess when it comes to the investment firms, I'm thinking if they're securing these bonds, essentially, what's preventing them from in the future combining the music catalog bonds with the coal mining bonds, and then with the electrical assets? And
nothing.
Exactly.
Nothing. But other than the fact that eventually it just becomes, again, it's just buying these rights.
Right.
The thing that you keep coming back to is if you own these rights and you've acquired them. That's great. Now what are you going to do with them?
Right.
Right? It's like, do you have the setup? Do you have teams of like people like pitching for syncs in France, in Germany, in Australia, in the States, and like what about how you going to go exploit that music in the South American market? And the answer is not many of them do, actually. You need what's called like an operations company that has that setup, who actually has the ability to go out and do the exploiting. And so what happens is, like, these companies who don't have any of that, yeah, they'll acquire the catalog, they've got the rights and they've got the ownership, but now they need to go out and do a deal with an operations company, like whoever it might be, those same players that I mentioned, who can actually go out and administer those catalogs and do all that sort of collecting. And it's you definitely need that. So those companies that have that platform, they're sitting pretty right now, because there's all this all these players who need their services, and they'll charge a fee for those services. And then usually with those types of funds, they don't want to stick around forever. They want to own for, like, they have an exit strategy, and they want to sell on again.
Right.
So, maybe they get a second bite of the cherry, and maybe in 5 years' time, the market's not as hot as it was. So now you're getting those bonds or those songs for less of a price capital, in terms of that capital investment. It just depends how long everyone holds on to them for. But I think there's going to be a lot more activity again in the future. Like, the high point, as I say, for this round was 2021. It dipped off a little bit in 2022. I don't think the prices were quite as staggering, and it has slowed down a bit in 2023. Like, it's still going, but the big headline, like blockbuster deals, other than,
you think, are over?
Not. I think it's just past the peak. The peak.
So you just touched on what my last question was going to be, which is, where do you see the catalog going in the next couple of years, maybe even the next 10 years?
Yeah, well, a lot of that is dependent in the near term on what interest rates do, right? The higher interest rates go and continue to go, the more attractive it becomes to keep your money in the bank, right? Or put it in the other types of assets that are, affected by interest rates. But ultimately, like, keeping your money in the bank and just benefiting from a nice little interest rate, at some point that becomes more attractive than making these riskier investments. Other people have to borrow money. Some people have to borrow that money and, like, finance via debt, and then that becomes more expensive to service. So where I see it going, I think it will continue. There will be acquisitions, and it's still, like, now that the trend has been set, I just don't think they're going to be at quite the staggering prices necessarily. So those artists who are standing by on the sidelines wanting to sell but waiting to see, probably missed the boat a little bit and getting, squeezing the pips out of it. That was happening in 2021. But yeah, it depends on what happens to interest rates. And then the other thing, like someone pointed out to me, is like a lot of these companies that are are public companies, they just need to be efficient and make the best possible return for their investors. And at some point, with interest rates going up, it flips, where it just becomes the best way to maximize value for your investors is to do share buybacks, basically. And that affects, like, PE ratios and all that. I don't want to get too far into it. It's pretty complex, and the guy I was talking to was a lot more knowledgeable than me. But yeah, so that could slow things down for those companies. So it just becomes cheaper, better use of their cash to buy back their own shares.
Got it.
And that sort of affects the fraction, let's say, and just boosts the sort of ratios that they're measured on. So Yeah, I think it all just depends on where things go. It will continue, and then my other prediction is that even if it does die down in another kind of like 3 to 5 years, those investment funds who were acquiring will be trying to exit, and then there'll be another wave of sales. So
and because you listen to the Record Shepherds, you will not miss that next wave, and you will come up with hundreds of millions of dollars to buy the next big catalog on sale because you listen to this podcast.
Absolutely. Can you imagine? We'll get hit up by these angel investors. Maybe we'll have a Record Shepherds fund.
Well, hey, maybe we should start our own admin rights company for when these investors buy more stuff, and then we can administer ourselves.
Yeah, we could do that.
The Record Shepherds music management firm. I don't know.
Okay, well, yeah, stay tuned in 2027.
2072, stay tuned. The Record Shepherds will be blowing up. But in the meantime, please follow us on all social media platforms and listen to us where all podcasts are streamed. We are also available on YouTube, where you can watch full clips of the Record Shepherds. And if you have any questions, comments, or concerns, you can email us at therecordshepherds@gmail.com. And if you're in the New York area and you'd like to stop by the Record Shepherds podcast, you can email us as well. Get in contact with us, DM us. We are open for business.
Absolutely. We welcome all comers, and we do have some very interesting conversations with guests coming up in the immediate horizon. So I would say, if you haven't already, do subscribe, do hit the like button. All that stuff helps us, and just share the good word of the Shepherds. So I think that's been a great episode, and we will be back soon with another exciting episode. So until then, continue to follow the guidance of the Shepherds.
Don't be the sheep, be the goat.